Byju's, once hailed as the torchbearer of India's startup landscape, has recently faced tumultuous times despite its meteoric rise. Wallaba billionaire CEO Byju Ravindran, the edtech giant, soared to a staggering valuation of $22 billion in 2022, captivating audiences with its online and offline education offerings. However, the past year has witnessed a sharp decline in both its popularity and valuation, prompting investors to question the firm's leadership and direction. How Byju started. Byju Ravindran's journey from a service engineer at a shipping firm to the helm of a pioneering ed tech company is nothing short of remarkable. His passion for teaching ignited during a visit to his hometown in Kerala in 2003, where he helped friends crack the MBA entrance exam, the CAT. His innate talent for instruction shone through as he aced the exam with a perfect score. Despite lucrative MBA offers, Ravindran remained true to his calling and returned to his job. However, his exceptional performance in the CAT exam 2 years later propelled him into the spotlight, attracting a surge of students seeking his guidance. This surge culminated in the formal launch of Byju's classes for the CAT exam in 2006, marking the genesis of a transformative educational venture. The Rise of Byju's, fueled by its founder's passion for teaching, embarked on an ambitious journey that revolutionized India's education landscape. Expanding its horizons beyond CAT coaching, the company evolved into Think and Learn Private Limited in 2011, broadening its scope to include undergraduate students. With an unwavering commitment to innovation, Byju's delved into the intricacies of school curricula, transforming conventional learning methods. By dissecting chapters into digestible segments and employing interactive videos enriched with real-life examples, the company endeavored to make fundamental concepts accessible to all. In a pivotal moment in 2015, Byju's introduced its groundbreaking learning app, a technological marvel designed to cater to students from kindergarten to class 12. This milestone marked the democratization of education, offering a holistic learning experience accessible to students across India. By 2019, Byju's had achieved an unprecedented feat, emerging as India's first edtech unicorn, a testament to its unparalleled impact on the educational landscape. Its ascent to unicorn status solidified its position as a frontrunner in the global edtech arena. Byju's emergence as a startup sensation. Byju's meteoric rise captured the imagination of India's burgeoning startup ecosystem. Its innovative blend of technology and education garnered widespread acclaim, captivating students and educators alike. The strategic utilization of interactive videos and cutting-edge technology set Byju's apart, transcending traditional teaching methodologies. Celebrity endorsements from icons such as Shah Rukh Khan and Virat Kohli further elevated its stature, cementing its status as a cultural phenomenon. Byju's astronomical valuation of $22 billion catapulted it to the forefront of the ed-tech revolution, positioning it as the world's most valuable startup in the sector. Yet, amidst the accolades, challenges loomed on the horizon, signaling the onset of a transformative chapter in Byju's journey. The Fall of Byju's. Despite its meteoric ascent, Byju's found itself grappling with unforeseen challenges that threatened its stability. The rapid expansion undertaken during the COVID-19 pandemic, intended to capitalize on the surge in demand for online education, inadvertently paved the path for a tumultuous downturn. Amidst the backdrop of exponential growth, Byju's encountered a slew of obstacles that tested its resilience. Cash flow problems emerged as a pressing concern, exacerbated by a dispute with creditors over a substantial $1.2 billion loan, casting a shadow over the company's financial health. The frenetic pace of expansion also laid bare the underbelly of Byju's organizational culture, with allegations of a toxic work environment and undue pressure on employees to drive customer acquisition. The strain on the workforce, coupled with mounting operational challenges, posed formidable hurdles for the company to overcome. In a significant blow to its valuation, tech investor Prosus dealt a severe blow by slashing Byju's worth by a staggering 75% in June 2023. The drastic revaluation precipitated a chain of events, including layoffs and accusations of financial mismanagement, underscoring the fragility of Byju's once vaunted position in the market. Moreover, Byju's parent company, Think and Learn (PVT Ltd), found itself ensnared in a web of controversy with allegations of non-payment of provident fund contributions to employees. The repercussions reverberated across the digital landscape as Google and Facebook suspended Byju's unpaid advertising dues, further exacerbating its financial woes. As Byju navigates through the turbulent waters of uncertainty, the road ahead remains fraught with challenges. The company faces a critical juncture, compelled to confront its internal shortcomings while charting a course towards redemption amidst adversity. Reasons for Byju's fall. 1. Pandemic-driven expansion. During the COVID-19 pandemic, when many people were staying at home and schools were closed, there was a big increase in the number of students studying online. Byju, an education company, saw this increase and took advantage of it. Between March 2020 and October 2020, they expanded a lot, which means they grew their company quickly. They did this by buying many other education technology companies, not only in India, but also in the United States. They wanted to make sure they were a big part of the growing trend of online education during the pandemic. 2. Excessive marketing and sponsorships. During their marketing campaigns, Byju spent a lot of money to promote their brand. They sponsored big events like Indian cricket team matches and the Football World Cup. This means they paid to have their name associated with these events, which helps them get more attention from people who watch these sports. They also hired famous soccer player Lionel Messi to be their global ambassador. This means they paid him to represent their brand and speak positively about it. Signing someone like Messi is expensive because he is a very well-known and popular athlete, so Byju spent a lot of money on this sponsorship. 3. Financial strain and losses. Despite earning a consistent amount of money, Byju ended up losing a lot more from 2019 to 2021. Their losses increased dramatically from Rs 2252 crore to a whopping 4,564 crore during this period. This means that even though they were making money, they were spending even more, leading to huge losses. In 2021, Byju couldn't pay back a loan of 1.02 billion that they had borrowed. This happened because they didn't manage their money well. They might have spent too much or didn't earn enough to cover their expenses, leading to financial problems. As a result, they couldn't pay back the loan they had taken, causing even more trouble for the company. 4. Delayed financial reporting. When a company like Byju doesn't submit its financial reports on time, it worries people because they can't see how well the company is doing financially. This delay in sharing financial information makes investors and others wonder if everything is okay with the company's financial situation. Because Byju didn't share their financial reports when they were supposed to, it caused some trouble. The company's auditor, Deloitte, and 3 members of its board of directors quit because they were probably concerned about what was going on with Byju's finances. They wanted to make sure that everything was transparent and clear, but because the reports were delayed, they decided to leave. This shows that delayed financial reporting can lead to people losing confidence in a company's stability. 5. Executive exodus and loan securing. When the Chief Financial Officer, CFO, and Chief Technology Officer, CTO, of Byju resigned in November 2023, it meant that they had left their jobs at the company. This could be because they were unhappy with how things were being managed, or because they found better opportunities elsewhere. In November 2023, the founder of Byju had to use his personal properties, like his house or land, as collateral to secure loans. This means that he promised the lender that if he couldn't pay back the loan, they could take his personal property instead. He did this to make sure that there was enough money to pay the employees of Byju's. It's a big deal because it shows that the company was facing financial difficulties if the founder had to use his personal belongings to secure loans. 6. Drastic valuation decline. The current valuation of Byju's, which is now $1 billion, has dropped significantly from its highest point. This decline indicates that the company is going through difficult and uncertain times. In the past, Byju's was considered a very successful and valuable company, especially in the field of education technology. However, due to various challenges and issues it has faced recently, its value has decreased dramatically. This decline in valuation suggests that Byju's is experiencing significant difficulties and may need to make changes to overcome its challenges and regain its previous success. Conclusion: the downfall of Byju's serves as a stark reminder of the challenges that even the most successful companies can face. The combination of aggressive expansion, financial mismanagement, and delayed reporting has brought the once thriving ed-tech giant to its knees, shaking the foundations of India's educational technology landscape. What lies ahead for Byju's? The latest developments paint a challenging picture for Byju's as shareholders push for leadership changes, including the potential ousting of CEO Byju Ravindran. With the company's valuation plummeting to an estimated $1 billion to $3 billion, it faces an uphill battle to regain investor confidence and stabilize its operations. In response to the crisis, Byju's is embarking on a critical fundraising endeavor, seeking $200 million through a rights issue of shares. This infusion of capital is deemed essential for orchestrating a successful turnaround. Fortunately, the company has garnered support from multiple shareholders for this crucial initiative. The outcome of the ongoing fundraising campaign will undoubtedly shape Byju's future trajectory. Its ability to secure the necessary funding and implement strategic reforms will be pivotal in determining whether it can emerge from this tumultuous period stronger and more resilient than before. As stakeholders await the outcome, the fate of Byju's hangs in the balance, poised at a critical juncture that will define its trajectory in the competitive landscape of educational technology. Only time will tell if Byju's can weather the storm and reclaim its status as a pioneering force in the realm of online education.